Right, good afternoon and welcome to our session today. First of all, I would like to apologize for delaying you. I'd say it past 12, but unfortunately, I had challenges with my network very early in the morning. So my first class had to be pushed forward. My apologies for that. But I hope I know that most of the time we don't face such problems. Right, my name is Eugene, and I'll be the one taking you for this MAC. Right, this module, for some, you are doing a year module. That means you'll be writing around October, but you write 4 tests along the year. For some, I know you are doing semester, and you'll be writing in May. Why are you mixed? Because the first part of the year module is what is done in the semester module for MAC 3701. Then the year modules, when they do the second part, that is the one that they start around May, June. In the second semester, they'll be doing the MAC 3702 part. So it's just the two modules which were combined into one. So that's why you see that for this semester, the year module guys will be combined with the semester guys for MAC 3701. In the second semester, I combined them with MAC 3702. Right. Our sessions. Yeah, I think as you know that we're a private institution, we do all our own things, but we do them in line with your syllabus. Right, our sessions for this semester, for this module, particularly because of the challenges that has been happening, most of the time I would try to make sure that we do about 2 sessions. We have a session that will not be passed, which will be the Wednesday. Our normal session is Wednesday at 6:15 to around 8 o'clock, to 7:45 or 8 o'clock, which is 1.5 to between 1.5 and 1 3/4 hours. That session, it's a definite session on Wednesdays. Then there will be another session this time around that I'll be doing either Saturday or Sunday. I think I will start that. I think the 2 sessions, I will start them officially, I think in about 2 weeks or so time. So next week, I think they will just do the midweek class. Right, why? Because this module, I'm not trying to instill fear in you, but I think some of you have done it before. You find that for these modules, you find that someone is doing for the 3rd time, someone is doing for the 4th time, someone is doing for the 5th time. So the approach that I've decided for this year is that during the week, we deal with content and questions and stuff like that. But the weekends will strictly be approach to exam questions and approach to answering. So the weekend, that session will start, I think, in about 2-3 weeks time. So it will be done every weekend, except of course when there's a holiday or there's a problem. So I want to dedicate the weekends to how to answer questions, strictly how to answer questions. No content, no theory. The theory will discuss it during the week. Right. So that's how I'm expecting to approach this module for this particular year. So that means except the first 2 weeks, 2 to 3 weeks, otherwise from the 3rd week or 4th week of our session, that is around the 20th, you should know that we will now have strictly 2 sessions for this module. Strictly at least 2 sessions. At least 2 sessions. One during the week and one during the weekend. The weekend one, it can be Saturday or Sunday. I'll be informing you, but if I can find a permanent slot, I'll tell you. That one, it will strictly be from the beginning. We want to know how to understand the questions and how to answer them to avoid challenges when we reach exam or test time. Right. So we start from the beginning. Our aim is to make sure that we cover the syllabus by the time we write. And we start from the beginning up to the end. We do a variety of questions. And during test time or during exam time, we do revision classes. For those who do assignments, we also try to do something that can help you to answer your assignments at that moment in time. Right, so these sessions are weekly, at least 2 sessions, but for now it will be 1 session, I think for the next 2-3 weeks. Then after that, it will strictly be 2 sessions until you write. Right, as I said, the weekend session will be strictly to ensure that you are ready for the exam and ready for the test. Strictly preparation for tests and exams, nothing else. We want to do more practice so that we avoid challenges that arise there. Right. So that means from next week, the Wednesday, 6:15 session in the evening will now become a permanent fixture from this Wednesday. It's now a permanent fixture unless if there is a public holiday. Number one, normal on public holidays, unless we're going for test or exam and I see that we're behind, I can ask you to meet during the public holidays. But normally public holidays, we don't meet. Then if I have a problem like load shedding, I think we know that it started yesterday. Normally I would reschedule the class to weekend. Unfortunately, if you have load shedding, the class goes on as long as I'm available. But all classes are recorded. And all classes recordings will be posted in your groups. You will be able to see them in your groups. I think the first 3 or so recordings, they might even be public. You can see them even if you're not part of us. But after that, they will be private. They will only be accessed by those who are registered with us. But for now, I think the recordings, I'll just be putting them, anyone can access them. But after the next 2-3 weeks, they will only be accessed by those who are registered only. So don't be surprised if you see you are registered and the recordings are out there. The ones that we start with, they even go out there. But after the first 2-3 weeks, they will now be strictly for you guys. Right, who will be registered with me. Right, we'll talk about all that later. So our classes, as I said, if I don't have any challenge, they are supposed to be 1.5 to 2 hours. Then the revision classes for tests and for exams, they can even stretch 3 to 5 hours. But normally, I expect to be with you for, but of course, this 2 o'clock. But normally, expect when I give you the starting time, expect to be committed for 1.5 to 2 hours. 1.5 to 2 hours, that's the minimum. And the special revision classes, they can even be 3, 4, 5 hours. But those ones I tell you on time. So under normal circumstances, if we say there's a class at 6:15, expect it to end anytime from around 7:45. I can also finish sometimes a few minutes before. Let's say I finish the topic at 7:30. I can't start a new topic at 7:30. Then I will have to cut the class at 7:30. But normally I cut around 7:45 to 8 o'clock. That is from 6:15, 1.5 to 1 3/4 hours. The Saturday one, normally I also allocate 1.5 to 2 hours. The weekend ones. Right. So I think I'll be posting my timetables. I'm finalizing on them by Monday. Then we'll have the permanent. But the Wednesday one, I know it's your permanent day. Wednesday one, I know it's your permanent day. Right. We'll talk about all other things. For now, I want to go to the content since I started late. Right. The first thing we have to understand our module. Right. Of 2 branches. And the one that we normally do from the lower grades. Right, and guys, please remind me if you hear that there's something that is happening and you can't hear me properly and it's on my side, alert us so that I know that if it's me, I restart the meeting or do whatever is right to make it everything right. Right, accounting is made up of 2 branches: management accounting and financial accounting. The accounting that we normally start earlier, that preparation of profit or loss, balance sheet and stuff like that in the earlier grades, it's mainly financial accounting. You'd find that at high school you do less, you do management accounting, but there's less of it. Most of it is financial accounting. But of course, you do those who do in later grades, they also do part of what? Management accounting. Right. What are the main differences between management accounting and financial accounting? Right. Financial accounting is mainly historic. What do I mean when I say mainly historic? Right. Please, guys, don't worry about these documents. These documents, when we finish class, I'm going to finish you with these documents. So don't stress. You get the documents and the recording by latest tomorrow morning, earliest today later. Right. Financial accounting is mainly historic. What does it mean when we say it's mainly historic? it mainly reports on what happened in the past. It reports on what happened in the past. Whereas management accounting combines, it uses past information to make current decisions and also to plan for the future. So management accounting is not only about past. It can use part of the past, but it's mainly concerned with the present and the future. It's mainly concerned with the present and the future. You'd find that in financial accounting, we can say, let's prepare the financial statements for 2024. Or what price can we charge this product? Then we start doing the accounts. Can we introduce a product B? We want to introduce a new product. Can we open a new shop in Bombela? Can we close the Pretoria branch? Those are the types of decisions that management accounting will be doing. How can we control our costs? How can we allocate our costs to the product? So it looks mainly at the present and the future. The past is mainly used as an input and be adjusted for current circumstances. Right. Then financial accounting mainly reports on the organization as a whole. Although sometimes you can even report, let's say, on the one department. But financial accounting's focus is mainly on the financial statements of ABC Limited, the whole company. But management accounting, it can deal with the whole or a section. It can even deal with one product to say, okay, we make beds and tables. We want to look at the tables, cost effectiveness of producing tables. We want to check, can we introduce beds? So you'd find that it can even look at the production department A only. It can even look at work of one person, worker gift. So it doesn't necessarily have to focus on the organization as a whole. Right. Then in financial accounting, there is strict adherence to international financial reporting standards. Whatever we do, it has to be done according to prescribed standards. There are defined ways of dealing with transactions, and we don't have to waver from those ways of dealing with those transactions. But in management accounting, there is no strict adherence to laws and standards. We can present information in whatever way is deemed best at that particular time and in that particular circumstance. It depends with the circumstance we are facing. Right. Financial accounting, we normally produce accounts. Of course, managers can use them, but our main reason is to produce them for external parties so that they can be able to review for banks, for shareholders, from creditors, so that they can see our accounts from last year, maybe for various purposes. Whereas management accounting, they don't go outside. They are used internally. They are used by management. They are used by employees. We can give them to the board. Of course, shareholders, they are part of external and internal. They can see some of these things. But they are mainly for those who are within the organization. It's very rare for me to see Shoprite management accounts. But it's very easy to see their financial statements. They are published in newspapers. Right. Financial accounting are strictly prepared according to periods, usually annually per year. Whereas management accounts, they can be prepared according to need. We can prepare for the last week. You want to assess the productivity of one department in the past week. We can do for a day. We can do for an hour. According to what we want, we can do for 3 weeks. We can do for 27 days. We can have even busy periods like 17 months. It all depends with what we want at that particular point in time. For example, we want to buy a machine and we know that the machine has got a lifespan of 3.5 years. We can do an analysis over 3.5 years. We don't have to go annually. So it doesn't have a strict adherence to the periods of, for whilst financial accounting, we know usually it's per year or per 6 months. Right. A general purpose, it's normally we just give all users one set of financial accounts, one profit statement, one statement of financial position, one statement of changes in equity for all users, regardless of what they want. but management accounts are prepared and provided according to the information required at that particular moment in time. So you'd find that a management accounting is mainly for decision making. So this module that we are looking at looks at what? Management accounting. Our focus is on management accounting. But of course, you will see that there are some principles that are from financial accounting that we shall also be applying. Right, and for those doing the year module, you will have two different areas. There will be the finance part, which you shall do in the second part of the year. It is the cost and management accounting part, which we are doing now. And those who are doing the semester modules, you are just doing the cost and management accounting. I think those who are doing the finance, you have another module, different module from this one. Like they can be marked 3702, they can be marked 2602, which deal with, if you're second year, mark 2602 deals with finance. If you are in the third year, we have marked 3702. But our focus in this session for now and for the next month, 3 or so, will be focusing only specifically on management and cost accounting in this session, which is what we deal with in Mark 2601, Mark 3701, Mark 3761. Right. I think the Mark 2601, they are part of this session, but they will be removed because I think from 2 weeks to come, we'll be looking at different things there. There's difference in questioning and stuff like that. But for now, we're dealing with the same concept. Right. A cost classification. Right. Every organization, they need to classify their costs. Right. Why do we need to classify costs? Right. You need to know which costs are we incurring so that we can allocate them to the products. In that way, you will know what is the cost of each product. You will know what is the cost of each activity. If you are a businessman, whatever you do, you want to know how much will I spend. If I have a cab, if I'm hired from Pretoria to Mpumalanga, how much fuel will I need? How much wear and tear will happen on my car? If I'm paying someone, how much will I pay the driver? If there's cleaning to be done, how much will cost my cleaning because it's a long journey? You need to allocate costs, understand your costs so that you understand the cost of your activities. And through that, you can also be able to control costs. Out there, there's a lot of competition. Because there's a lot of competition, there's a possibility that you might lose out to competitors. So what do we have to do? Normally, we have to make sure that our prices are competitive. And how do we do that? To make sure that our prices are competitive, we control costs. If your cost is low, you can also be able to charge a low price. But if your costs are high, there's no way that you can charge below your cost. And you end up charging high prices. And those high prices will outprice you against competitors. You won't be able to compete. They won't be feasible or practical. Right, we also need cost so that we can price our products. One of the methods, as we shall see later in our later topics, to determine cost is cost plus pricing. With cost plus pricing, you determine your cost, and to your cost, you add a certain percentage of desired profit. If you want 20% profit, I work out my cost, I know they are 400, and I know I want 20% profit. 20% of 400, I know that it's 80. So I'll add the 80 to the 400 to arrive at my selling price of 480. So costs will help in determining my selling price. So we also need to understand, classify, and allocate costs so that we can be able to what? Determine our prices. Right. We also need costs so that we can be able to perform what is called performance appraisal. Right. Some departments are what we will learn at a later stage, that we have different types of centers. We have revenue centers, which only earn revenue. We've got cost centers, which only incur costs. We've got profit centers, which incur revenue, which earn revenue and incur costs. And we've got investment centers, which also have assets. So we find that with cost centers, we normally appraise them depending on how they are controlling their costs. So we need the cost so that we can be able to determine if they are performing well or not. I gave examples down there that if you are making, let's say, tables, you need to know the cost of producing one table so that you can determine your price. I also gave an example of an auditing firm or accounting firm. You need to know the cost of preparing accounts for an organization. Right. Any questions? Right. So because we need to know costs, we have to classify them. They can only be allocated depending on the classifications, as you shall see. The classifications will determine allocate those costs. Right. Now to allocate, we allocate costs to what is called a cost object. A cost object is whatever item, whatever unit to which we are allocating the cost. A cost object can be a product. For example, a computer in a computer manufacturing firm is a cost object. In a service firm, it can be the service. An audit firm, the audit that they are doing for ABC Limited, the costs that are incurred. So the audit of ABC Limited becomes the cost object. It can be a branch or a division. For example, there I gave that the Neumapias branch, if our divisions are by location. Or maybe they are not by location. Let's say I gave an example of clothing. There can be men's clothing, women's clothing, and children's clothing. So the children's clothing can be a cost object to which we allocate costs. It can be a department, the finance department. What are the costs for finance? I think where you work, you always determine your costs. So a cost of it can even be a certain employee that we want to know the costs that were incurring in terms of the employment of Mr. Samuel. So anything to which we can allocate costs is a cost object. So the cost object depends on what we are trying to understand at that particular point in time. If we want to do the budget for departments, the departments will be the cost objects. If you want to know the cost of our products, each product will be our cost object. So when we allocate cost or classify cost, we allocate them to these cost objects. Right. How do we allocate our costs? Costs are allocated in different ways. We can allocate according to cost behavior. How does it behave? When we say how does it behave, how does the total cost change if we increase or decrease the level of production? How does it respond? So is the response to change? As relevance, function, and timing. So we're going to look at allocation using all these 5 ways, one by one. And you'd find that these ways of allocating are usually important depending on how we allocate the cost. The decision that we want to make at that particular point in time. So they depend on the particular moment in time that we are, the decision that we're doing at that point in time. Right. Right. So let me now go to classification of costs. As I said, don't worry about the documents that I'm using. When I send the recording, either later today or early tomorrow, I will send together with the sheet. All right. I think this cost object, I will jump because I've already explained it. Right. For cost to be able to be classified to cost objects, we need to classify our costs by different ways, which I've looked at. So I've already looked at up to this. So now let me start by behavior. Right. A variable cost. Right. When we classify by behavior, we've got different classifications. There are about 4 or 5 different classifications that we can use. Right. We have we've got what we call variable costs. From the word vary is to change. What are variable costs? Variable costs, these are costs that do not change per unit. I want you to get me clearly. They do not change per unit normally. Let's say you are manufacturing radios, the same type of radio. The raw material that you need per radio, it's exactly the same. If you need 2 speakers, there will be 2 speakers same size on each radio. In those 2 speakers, to get them or produce them, they cost exactly the same. So we're saying per unit, per each unit, there is no difference in the cost incurred. If you are into clothing and you are manufacturing jeans of the same type, the material that you need per jean and the labor hours that you need per jean are exactly the same. So they don't normally change per unit. I said they don't normally change. Why? Because maybe sometimes you can find that they can change. For example, when employees are now experienced, where they used to spend 2 hours, they will now spend 1 hour, 40 minutes. Or maybe where they sabotage, or maybe the machines are aged, it can increase the time. So we're saying normal. That's why I said normally they do not change per unit, the variable cost. However, they change in total. They change, they are called variable. When we are looking at the characteristics of a cost according to behavior, we don't look at the cost per unit. We look at the cost for all the units. That is the total cost for all the units. So we are saying the total cost will change as production levels change. If I'm producing chairs, the more the chairs I produce, the more the wood I need. If I decide to reduce production, I will need less wood. So you'd find that with the variable cost, as you increase production, they increase proportionally. The direct labor I need, if I needed 4 hours per unit, if I produce 2, I will now need 8 hours. If I produce 3, I will now need 12 hours. So as I double production, the cost also doubles. If I have production, the cost also halves. So it increases or decreases proportionally according to the what cost and to the units produced. That's why they are called variable. So they vary in total. In total, they change. Right. Examples, they include things like direct material, the raw materials that you use. They include things like direct labor, commission based on sales. Normally, the more the production, the more the sales, the more the cost. The production, the less the sales, the lesser the cost. I gave an example here of wood. Let's say each table requires 2 square meters at 200 per table, 800 per square meter. That means 1 table would need 200 rand. If I produce 5 tables, I'll need 200 times 5, which is 1,000. If I produce 10 tables, I'll need 10 times 200, which is 2,000. If I produce 50 tables, I'll need 50 times 200, which is 10,000. Now, as you can see, if my production increases times 5, the cost also increases times 5. If it increases times 2, the cost also increases times 2. It increases proportionally under normal circumstances. Usually, sorry, not normal, because they can be what we call the learning curve. Right. So graphically, this can also be presented graphically. Right. This is the variable cost per unit. It just remains the same. It doesn't change when production changes. So if it's, we know that if my per table here, if it was 200 per table, even if I produce another one, each table will just need 200, 200 200 rand for me to produce each table. So this is variable cost. Variable, this is for variable cost per unit. But in total, it will be increasing. It will be a straight line going upwards, which is the cost and the units. So you can see that if I don't produce anything, I don't need wood. I will not buy wood. My cost will start at 0. Then it will be increasing as production increases. So that's why it's called variable, because it increases. It will be a straight line. Forgive my line here, but it will be a straight line. Any questions on variable cost? Right, I'll move on to the next one. Please, for you to understand management accounting, you have to understand whatever I'm talking about here. Otherwise, if you don't understand these basics, the whole semester will be harder for you. That's why we start with these basics. Because you see, when we do direct costing and absorption costing, we'll talk about these differences of variable and fixed cost. When you do standard costing, there will be variances that will depend on whether it's variable or fixed. So, especially this part, please make sure that before you move on, you have understood this part. Normally, I always encourage my students that before the next class, before our Wednesday class, look at everything. Make sure that you have understood. So that when we start on Wednesday, maybe we start by reviewing any questions you have. From there, then we'll proceed. Right. Then we have got what to call fixed costs. Now, fixed costs, these are costs, they do not change in total. Right. Please, there is no contradiction here. On variable costs, we say they do not change per unit, per each unit. But these ones now, they do not change in total as production changes. So if you increase production, they remain the same. If you reduce production, they remain the same. For example, rent. If you are renting a factory and your landlord wants 50,000 per month, that's your agreement. You agreed on 50,000 per month. He doesn't care how much you produce. I think we saw it during Corona. Some companies continued to pay rent even if they were not working. The landlord does not care. He just needs his rent. He just needs 50,000 every month. He doesn't mind if you produce 1 unit, 50 units, even if you overproduce, they don't care. They just want their 50,000. So a fixed cost is a cost that does not change. Salaries of managers, they will earn a given salary, which is known, and that salary will not change. If the company does not do well, they know that I signed a contract. My salary is 1.2 million per year. I get my 1.2 million. Maybe what can be affected is bonus, but my salary is 1.2. It doesn't change. Some can say, okay, even the salaries of low-level employees, they are also they are also fixed. Those ones are not fixed, they are per hour. The way that they are determined, those salaries that you see, those ones, those low-level employees, they can say I earn 9,000 a month, but that amount is paid per hour. I think you see when they do the agreements, they will sign that the salary is per hour. So at the end of the day, your labor hours are variable. Right. So you would say that fixed costs, they do not change in total, but they change per unit. Right. Now, the good thing about fixed costs is they are compensated if you produce more, but it's bad if your production is very low. So the more you produce, the lesser the fixed cost per unit. Right. As you can see here, let's say Miracles pay rent of 100,000. If they only produce 10 units per month, that 100,000 will be allocated to the 10 units. Then each unit will be 10,000. If they produce 20, 100,000 divided by 20 will be 5,000. If it's 50, 100,000 divided by 50 is 2,000. As you can see, the fixed cost per unit, as you produce more, it will be reducing. As more units will now have to what? Share the one cost. It's just like this is a Saturday, you agree with your friends, you are 5. Then you say, let's buy our 30 drinks, 6 each, whilst we are watching the match between Orlando Pirates and the Kaizer Chiefs. You have already budgeted, you have 6 each. You buy your drinks, they are 30, and you are 5, it's 6 each. But suddenly, just before the game, your cousin comes in, visits. Then he sits there. So instead of you sharing 6 each, you now have to divide those drinks by 6. You are now 6. 30 divided by 6, you now have 5 each. So the more the people, then the share to each person goes down. So when you are producing, that's the same thing. If you produce a lot of units, those increased units will now be sharing a cost that is not changing. Because of that, the cost allocated to each unit will reduce. So for a producer, for fixed costs, it's better to produce more, because as you produce more, the fixed cost per unit will reduce, which will also reduce the total cost. Right. So now these fixed costs, in total, they are like this. Sorry, these graphs, they will not be in the document. You just see them maybe. These fixed costs in total. It will just be 100,000. The landlord just needs 100,000. He doesn't care if you produce 5, if you produce 1,000,000. We'll just pay 100,000. But per unit, as you produce more, as you can see, it will be going down, but it will never be 0. It will just go nearer to 0, but it will never be 0. That's why it's not touching the axis. So it will be reducing. As your production increases, it will be going down. And it doesn't go down proportionally. That's why it's not a straight line. It will be a curve. It will be curvy. A curve. So that's a fixed cost. So in total, it doesn't change. Per unit, it reduces as production increases and increases as production reduces. It's in opposite direction to production. Any questions? Right, I'll go to the next one. Right, on that behavior, we also have what we call step costs. Now, step costs, they are also sometimes called semi-fixed. They are semi-fixed costs. With step costs, they remain fixed for intervals. Then they change at given intervals. Remain constant again and then change again. Right, I gave an example here. Let's say as long as your production is below 100, your factory is enough that you'll be using. So you just pay a rent of what? 200,000. But as long as your production exceeds 100, it becomes impractical for you to produce the 100 units. So you now need a second factory. So when you now have two factories, it will now be 200,000 times 2, 400,000. When you reach the 200 mark, you need another third factory. Then you now have to pay 600,000. When you reach 300, another factory. So after every 100, it will be going up. That's a step cost. Although fixed, it increases in what we call steps. Right, so if you can check here, step cost. Right, here it will be 200, up to 100 units. Then when 100 units is reached, it goes up. It becomes 400. Let's say it is 1,000, my friends. Then for another 100, maintains that level. When it reaches 200, goes up again. It's now 600. So it is increasing in steps. That's why they call it a step fixed cost. If you look at it graphically, it's like going up in steps, on and on like that. So although it's a fixed cost, there are certain intervals that it changes. It doesn't change per unit. It changes in intervals. And after those intervals, when it changes, it remains constant for some time without changing as units. Like, for example, from 201 units to the 299, it will just be 400,000. No change. That is step cost. Any question? All right. Then we also have what we call mixed costs. All right. Now with mixed costs, mixed costs, they contain both variable and fixed cost elements. They've got two elements, variable and fixed. Sorry, just a second. I just want my page to respond here. All right. For example, if you have got a fixed telephone line, there is a fee that Telkom would want, which has nothing to do with the number of calls that you've made. Every month for having that telephone, you have to pay that given amount. Pay that given amount regardless. Sorry, regardless of the what? Of the calls that you make. Then you'll have now an additional cost, which now depends on the calls and the length of the calls, and whether they are international or they are local. Or I gave another example here, that a sales staff at Quintine Limited are paid a fixed salary of 100,000 per month, and they also earn a commission of 20 rand per unit produced, per unit sold. Is that right? My friends, these guys, that means regardless of the sales that are made, they will earn the what? The 100,000. So even if it's zero, they will still get the 100,000. We can say, there was load shedding, so there was nothing to sell. We have contracts, so we pay them the 100,000. But then on top of that 100,000, there will now be an extra, which depends on units. If 500 units are produced, they will get the 100,000 plus the 500 plus 20. Then they get 110. Then if it's 1,000, they'll get 100,000 plus the 1,000 times 20. They will now get 120. If it's 5,000, 100,000 times plus 5,000 times 20, which is 200,000. On and on like that. So these are what? Semi-fixed. So semi-fixed, you'd find that there will be the line will be like the variable one, but the difference, it doesn't start at 0. Remember, the variable cost started here going up, but now here it will start from the fixed cost of 100,000, because even if production is 0, there will be the 100,000. Then it will now be just like the variable cost going up now, depending on what? Sales. And in our next class, we're going to learn how to separate mixed costs. That will be the subject for our next class. Right. Any questions there? Right. The other way we can allocate costs is by assignment. When we say assignment, it's how easy it can be traced, or it can be associated with the cost object. Right. A cost is called a direct cost if it can be easily traced or associated with a cost object. If we are producing tables, we exactly know the quantity of wood that we're going to use on the table. So the wood will be direct cost. We exactly know the labor hours that will be spent in manufacturing that table. And we know how much we pay the labor employee. We exactly know any other extra goods that are included in that product, a material. So those are direct costs. And indirect costs, these are costs now which are incurred in the production process, but cannot be easily be traced to the production units. For example, electricity. You can't tell that this electricity was used in making this desk. That cannot be possible. Rent of factory. If you rent a factory, you can't say the rent for this one is this much. You are just renting a factory. It's not per table, it's per factory. Salary of the supervisor. We can't say his supervision for this table was so much. So those are indirect costs. So when you say assignment, we allocate according to how is it easy. And please note that, of course, in most instances, direct costs are variable, the variable costs, whereas the indirect are the fixed, but it doesn't always follow. For example, if our cost object is a department, let's say a branch, so the Mamelodi branch fixed rent becomes a direct cost because it's directly associated with the what? With the branch in what? Pretoria. So direct does not necessarily mean variable, although in most times direct means variable. So direct, whether it's direct or indirect, depends on the type of cost object that we're looking at. If the cost object is a product, of course, we know that variable cost will be the what? Will be the will normally be the direct cost, whilst the others will be indirect. But if our cost object is like, let's say, a department or it's a branch, then it can be different in that instance. Some fixed costs can become direct costs. So it depends with the cost object. Any questions? Right. Then we can also classify by relevance. When we classify by relevance, is that cost important for the decision that we're making? Is that cost affected by the decision that we're making? If a cost affects or is affected by the decision at hand, it's a relevant cost. And if a cost is not affected and does not affect the decision that we're about to make, it's an irrelevant cost. So relevant or irrelevant depends on the decision we are making. How does it impact and how is it impacted by the decision? Right. Incremental costs are costs that will increase or decrease depending on the decision that we've taken. So incremental costs, in fact, we are saying these are costs that would directly relate, that would directly increase because of taking a particular decision. If we don't take that decision, they are not going to be incurred. So they are relevant because they are directly resulting from the decision. So incremental costs are costs that are directly arising from taking a particular decision. So they are relevant because if that decision is not taken, they will not be incurred. Right. Differential costs or revenues. Differential costs or revenues, these are costs or revenues that will differ depending on the decision that has been taken. So if we decide A, the cost will be different to if we decide B. For example, if we are deciding on whether we should open a branch in Durban or we should open it in Tebeja, right? If the rentals of the shop in these two areas are different, then that's a differential cost. So a differential cost, it's a cost that is different depending on the decision or that we've taken. So it's a relevant cost. Then we've got what we call sunk costs. Sunk costs are costs that we've already incurred, and they will not be affected by the decision that we're about to make. For example, let's say you want to open a branch in Cape Town, but 2 months ago, you went to see the place and you spent about 5,000 when you were checking that place. That 5,000 is a sunk cost. It will never affect any decision. Whether you go and open in Cape Town or you don't open in Cape Town, you will not recover that 5,000. You've already spent it. So it's a sunk cost. Or maybe you are deciding to produce a certain product, but you already have some raw materials that can be used, which have no other use. The cost of those raw materials is a sunk cost. So a sunk cost, it's a cost that has already been incurred, which will not be impacted by the decisions that we're going to make. Right. Then we've got a committed cost. A committed cost is a cost that we've agreed to and contracted to, which will not be changed by the decision. For example, we signed a contract at our Pretoria branch to rent the building for 50,000 a month, and that a contract cannot be cancelled for the next 4 years. So when we're making the decision on whether to close that branch or keep it open, that rent is irrelevant because we're still going to pay it whether we close or open. Because our contract stipulates that whether we move out or not, we'll pay that rent. So it's an irrelevant cost. It is not impacted by the decision. Whatever decision we make, it will not change. Right. Then we've got opportunity cost. Opportunity cost, these are costs of foregoing certain alternatives. If producing product A means sacrificing product B, then the profit we could have obtained from product B, it's an opportunity cost. So whatever we are losing from the next best alternatives because of the decision that we've made is an opportunity cost, and it's relevant. By attending this class, you missed your appointment with your friend. That's the opportunity cost. Maybe your friend is angry right now. That's the opportunity cost. So it's the cost of taking another decision in place of another, preferring one decision over another. Sacrificing is the sacrifice that you have made for you to be able to do what you are doing. Right. Example of relevant costs, future costs, differential costs, cash flow items that will affect future cash flows, opportunity costs, and incremental costs. I explained them above there. All these are relevant costs and they'll be important when we're making a decision. Then irrelevant costs, things like sunk costs and committed costs. I think I explained that they are irrelevant. So irrelevant costs, when we're making a decision, we don't take them into account. Right, then we can also classify by function. What is the purpose of that cost? Direct materials. We know that these are materials that are required to produce goods. Direct labor, the labor that we are paying to the employees who are actually making the goods. Then overheads, all other costs incurred in the production process other than direct labor and direct materials. Things like rent of factory, depreciation of factory machinery, factory supervisor salaries, oil for the machines. They are necessary for production to take place, but they are not directly going to be part of the product. Non-manufacturing costs are all those costs that are necessary but are incurred in activities that have nothing to do with the production of the goods. And they can be classified into selling and distribution. For example, commission that we pay our salespersons, or transport for our goods to our customers. So selling and distribution, these are costs that are incurred when transporting the goods to our customers and when enabling a sale with our customers. Then administration costs, administrative activities. We're talking about the managers, the offices there, who process the salaries and stuff like that. We can also have finance. They can be interest and borrowing costs, and sometimes we can refer to the finance department's costs. That's a classification by function. Then classification by timing. When we say timing, we mean the time that we recognize the cost as an expense. Product costs are costs that will be recognized when the product is what? Produced and sold. So they will be included as part of the product. Direct labor, direct raw materials, sometimes fixed the manufacturing costs, they are included in product cost. So product costs are mainly those that are in manufacturing costs. Usually it's manufacturing costs. That is direct materials, direct labor, and manufacturing overheads. That is if we are using absorption costing. You will learn later about absorption costing. But if using direct or marginal costing, fixed overheads will no longer be part of the product cost. They will now be period costs. Right, and what are period costs? These are costs that are recognized immediately when they are incurred. If you pay your rent, that time is an expense. Rent of your office buildings. But the rent of the manufacturing building will be allocated to the cost, and the cost will only be recognized when the goods are sold in cost of sales. So period costs are normally it's non-manufacturing costs, but if we're using direct costing, they will also include fixed manufacturing costs. Any questions? Right, so this is how we allocate the different costs. So in our next session, we now want to learn how to estimate our cost. When we have got mixed costs, how can we estimate that these are variable and these are fixed? Any questions? Right. If we don't have any questions, then for now we can enjoy our weekend. As I said, that just for today. I'll give you a shorter session, but the next sessions normally they are 1.5 to 2 hours, but let's say around 1.5 hours. So our next session will be on Wednesday. The recording will be posted in the group together with the notes that I was using. So read ahead on cost estimation. Our next session will be on Wednesday. The Wednesday session for this, it will be at 6:15. 6:15, we'll start at 6:15 on Wednesday. Any questions before I close the session? No questions. Right. If you are a soccer fan, we wish you all the best if you are supporting Kaizer Chiefs. And we wish you all the best if you are supporting Orlando Pirates. Have a nice day.
Bye-bye.
Yeah, Mr. Patrick. Hey, bye.
Yes. Good luck. Good luck for the Buccaneers.
Yeah, may parents lose.
Yes, my parents lose.
Okay, my man. See you, my man. Thanks very much. All right. So this is one of our first classes. The classes will be held over the semester, over the year for different and various modules. So if you wish to contact us and join us on a permanent basis, you can be able to contact us on the email that is given there on your screen and the phone numbers that you can see on your screen there. You can WhatsApp us so that you can be able to join us permanently to join our classes there. All right. And also, we offer various modules: financial accounting, management accounting, auditing, taxation, management, managerial finance in various areas. AIN, CAS. So feel free if you want to join us on a permanent basis. So because our videos, not all of them will be available publicly. At times, some of them will not be available on a public basis. They will only be accessible to those who have registered with us. So for more information, feel free to contact us on those numbers. Thank you so much. God bless you.